welcome to Building Wealth. About 20 years ago, I was introduced to this resource by a friend of mine, and I've used it many, many times over the last 20 years to help people understand what wealth is, understand how they can use their money to accomplish their goals. I've used it in the high school classroom. I've used it with clients. I've used it with clients' children and grandchildren. It's a great resource that I'm happy to share with you. And it's actually put out by the Dallas Federal Reserve. So if you'd like a copy of this, you can either contact us, or you can go to the Dallas Federal Reserve, www.dallasfed.org, and go to Building Wealth, and they will actually send you booklets, or there's a PDF version if you'd like to just view it online. So we're going to cut it into 5 modules. There's really 5 different courses in this. Learning the language, what is wealth to you? Budgeting to save, which I think a lot of people have budgeting questions. It's helpful. Saving and investing, and some of the terminology used in the investment world that can maybe help you. Controlling your debt, which I think everybody who is accumulating and buying a home and or going to college and paying off college loans needs to learn about controlling that debt. And then protecting what you have. Obviously, as we build wealth, we want to make sure we have the proper protection in place in case something goes awry, so that it doesn't wipe out what we've worked so hard to save. So we'll break that into 5 different modules, and you can they'll be in different videos, so you can click on the one that you'd like to start with and kind of work around from there. So enjoy. Hopefully it helps. Welcome to the first part of Building Wealth. We're going to talk a little bit about defining your wealth, and then we're going to get into learning the language. And so let's start with definition of wealth. If you're going to create personal wealth, it's very important that you determine why it's important to you, what wealth is to you. Some people consider themselves wealthy because they live in a big house or travel the world. Others believe they just want to pay their bills on time, right? So we really want to define why wealth is important to you, so that you have motivation to build and grow that wealth. So in this workbook, there's some basic information. It doesn't get super in depth on everything, but certainly helps touch on some things that are important on your building wealth journey. So let's define what wealth is. Take out a scratch sheet of paper or open your book and write down the things that are important to you and why wealth is important to you. There's a couple examples: putting your kid through college, having enough to buy a house or put a down payment on a house. Could be financial independence. Could be just having enough so that you can retire someday. Could be enough to pay for vacations and not have to put them on credit card. What is wealth to you? And let's define that wealth. So now that we've defined the wealth, let's talk about some definitions in wealth building and wealth management that we use pretty often. In this case, we're going to use Anthony as an example. Anthony is 35 and he works for a manufacturing company. He looked at his finances and realized that at the rate he was going, there wouldn't be enough money to meet his family's financial goals. So he chose to grab this book and embark on a wealth creation strategy. He began to learn the language, and the first lesson was to understand assets, liabilities, and net worth. Very simple formula: assets minus liabilities equals net worth. So what is an asset? I tell people an asset is something you own. Particularly, we want to focus on wealth creating assets. Wealth creating assets usually grow in value over the long term. Okay, those examples of those might be a savings account, a retirement plan, stocks and bonds, a house. Those are things that typically grow over time or increase in wealth, increase in value over time. Other assets like a car, phone, computer, household furnishings, clothes, those things typically don't increase in value, and they actually decrease in value over time. So not saying that we don't need those things. Those things help us in a day-to-day world accomplish some of our goals and help us maybe even create wealth by using those tools. However, those don't increase our net worth over time. They typically decrease our net worth, and we're consuming those things. They are decreasing in value. A liability is something we owe somebody else. So examples would be obviously a mortgage, credit cards, car loan, hospital or medical bills, student loans, any dollar or anything that you owe somebody else is a liability. So very simply, we can define and come to our net worth by using the formula assets minus liabilities equal net worth. This is a simple balance sheet, and using Anthony as the example, his cash and savings, the stocks and other investments that he holds, his 401k or IRA. He doesn't have a home, so that value is zero. His car is currently worth $14,000. So his total assets are $46,500. Obviously, he doesn't have a mortgage or home equity line of credit. He has a car loan, credit card balance, student loan, and other liabilities totaling $22,500. So if we take his assets of $46,500 minus his liabilities of $22,500, that equals his net worth of $24,000. If he were to sell everything and move to a deserted island in paradise, he would have $24,000 to take with him. So take a couple minutes here and write on a scratch sheet of paper, or even in the book, your assets and the liabilities that are typically tied to those assets and what your net worth is.